Good morning, everybody. Welcome back to Morning Markets on Monday, the 29th of June. A couple of things to share with you this morning that we found interesting. The first of which is to reflect just on what happened in asset markets last week and what did we see there. Over the course of the week, as you'll have appreciated from the various morning comments, we did see an increase in volatility. And that volatility was specifically and probably most evident in equity markets, as we saw rising COVID-19 infection rates in a number of countries such as the US, China and Germany. That fed through over the course of the week to, I suppose, on Friday, where we saw a pretty weak day in US equity markets, with most of the major indices in the US falling over 2%, and within that some of the more economically sensitive, or those sectors that have benefited from thoughts of how the economy is going to reopen, not performing that well at all. That has then led through to sovereign bond markets, where we saw treasuries in the US yields come in further. So the 10-year treasury in the US yielding 64 basis points at the moment. And then in the UK, we see UK 10-year gilts at 17 basis points. The other thing I suppose to think about in this regard is just what does that mean for economies and the reopening that we've been seeing. As we touched on, rising COVID-19 infection rates are a clear negative. We saw that and we've seen that in the number of US states over the weekend, where the trend is on a rising trajectory at this point in time. And indeed in the likes of Florida and Texas, we've seen the reimposition of some of the social gathering restrictions that had been in place. So that will slow economic recovery. What does that mean? Probably in all likelihood we are in for more volatility within asset markets, because it changes the dynamics and the dynamics of the phase of the recovery phase that we're going through, and more importantly the speed of that recovery and the stop-start nature of it. If we then look at other stories that we were discussing this morning, the first of which was around the industrial profits number that we've seen released from China, which for May did show an improvement from the decline in April, where we saw a decline in April of 4.3%. This time around we saw an improvement of some 6%. That's great. It's really good to see the ongoing improvement within China. I think if we take it in context and we look at the first 5 months of the year, we know that industrial profits are down some 19% year on year. So that gives you an indication of the magnitude of the decline in profits from industrial businesses in China. Staying with China, we have Chinese PMI data later in the week. That'll be interesting for two perspectives. One, to observe the ongoing recovery in the Chinese domestic economy. And if you remember back to last month when we had the PMI data, one of the key things was the relatively subdued nature of the recovery in export demand. This month, with the reopening of and the continued opening of global economies, it'll be interesting to see if we get a move upwards in the export component of the PMI numbers from China, which then would help us think about the recovery in the domestic economy, but then how the gradual reopening of other economies is benefiting Chinese businesses as well. And then just the other things in terms of thinking about the week ahead. What do we have? Well, we've got a number of data points that we can look towards from Asia in particular. Japanese data on the economy there. Then we'll also have information coming from South Korea looking at exports. South Korea is a really interesting economy to look at from an export perspective, because it does give you an indication of a broader based industrial recovery across the globe, just given the integrated nature of the South Korean economy into global manufacturing, and particularly higher end global manufacturing such as semiconductors, etc. We'll also hear from a number of Fed officials, and we'll get the minutes from the FOMC's most recent meeting, which will again just give little indications as to what the Fed was considering as they made their decisions at the last meeting. That's it for today. Please join me again tomorrow. Many thanks.